Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker. So, Michael, in this podcast, we're going to talk about limited partners, their role, their very, very important role in a transaction. So the lender brings 80% to the transaction. We typically are your best friend. You and your limited partners bring 20% into a transaction. The limited partner has a huge role into the deal. They bring the money. So we're going to talk a little bit about limited partners and their role into a transaction, what they like and what they don't like. Why are they limited partners? Why are they making passive investments into your transaction? What they like about your deal, what they don't like about your deal. We want to kind of explore a little bit with a limited partner that has invested in many, many, many real estate partnerships. So whether it is you and your brother-in-law or sister-in-law that have invested into a partnership all together, you're the lead. They're the people that have just put the money into the deal. Whether it's just one or two people, or there's 40 or 50 or 100 limited partners. We cannot buy real estate on the size of these transactions without having partners, limited partners into the deal. So Mike, I always like my airplane analogy when it comes to investing in real estate. So we all have places to go and we rely upon the experts to get us there. Whether it's acquiring, rehabbing, or managing real estate on behalf of the partnership, or flying 250 people from Salt Lake City to Dallas, we all need qualified folks directing or piloting our money or our lives. In the cockpit, we have the leaders of the partnership, the captain and the first officer. The captain is the lead or the general partner. She determines where this airplane is going, how long it's going to take, or in real estate, how much equity capital will be needed to rehab and then operate the property. She's responsible for making all the day-to-day decisions. She has the confidence of the entire partnership. When she sets the course, she will get us there, hopefully on time and under budget. The first officer is in the cockpit too. He is there to assist the captain. He can step in and fly the jet if something happens, but he is not the captain. But many times he wants to be the captain in the future, so he's learning and looking to see how he can help the captain. In the back of the airplane are the passengers. They're the ones who bought the ticket. They've invested in the partnership. It was their responsibility to choose the right airlines and the right captain. Unfortunately, today, you cannot choose the captain of a plane. But in investing, you can choose the right transaction. And after reviewing the private placement memorandum and the disclosure, in this case of the captain's resume and his or her successful flights that hopefully were even, that they were even with the takeoffs, were even with the landings. So limited partners are very important. They give us the fuel to get the jet from here to there. They give us the opportunity to buy these properties. So today we speak with somebody that likes to be in the back of the airplane. He doesn't like to do the flying, doesn't want to do the flying, and lets the flying be done by somebody else. Today, we speak with Charles Lemaire. All right, Charles, what do you do?
I am an engineer, or as I prefer to really say, the truth is an overpaid programmer. I work in the engineering environment. We make integrated circuits. I guess I can say I work for TI. I have a couple of degrees in engineering. Let's see, what do I do for a living? They pay me, so that's about it.
But you are a computer guy, a full-time employee of a large corporation, and you are investing in real estate, but you're not operating the multifamily properties, right?
Not on a regular basis.
Okay. Why multifamily?
We went to Lifestyles long ago, back when Brad was the dude there, and he did the presentation, and the single family stuff was going, and I was going, I'm not getting into that thing. And then finally he went to the multifamily, and I'm an engineer. The math in multifamily looks good. I could understand it. It made sense. And I said, I'm on board. And we joined. I guess I should say when Brad left, we followed Brad because he was the brain trust in our opinion. And we are now, happy members of the Brad community.
So why passive? Why don't you run your own transaction?
I know a couple of people who do run their own transactions and work for a living. I'm not sure how they do it other than perhaps not work very hard. My job doesn't lend itself to dropping everything to go fix a problem. Now, there's not many problems during the operation of an apartment, and I have actually stepped up and done that on occasion, but when you're trying to buy the thing or sell the thing, things come up and you have to go talk to people. Appointments have to occur. Problems exist and you got to go fix them. And that's just real hard to do if you got a real job that works full time. Now, I know an outside chem engineer, I think he just did it all on their time, but I'm not allowed to do that because I have ethics.
So how many partnerships have you invested in?
The count is 27 at this point. I sort of enjoy this. The money's good and the time is real reasonable. The big problem is going to the bank all the time to cash the checks. Tongue in cheek.
Is specific multifamily education required for a passive partner like you? And would you recommend it?
Definitely yes, unless you're just filthy rich and crazy as a loon, because you can lose a lot of money on a thing like this if you don't have a clue what's going on. Actually, I can coach people a little bit. Some guy called me up with a deal he had been asked to do. It's the best deal in all of Fort Worth, he was told. Sent me the spreadsheet. I looked through it. And I was just amazed that they could find a 99-year mortgage on this thing so they could keep the payments real low to make the thing look good. There were several other problems with it, but if you can guess, there's no such thing as a 99-year mortgage. It was a fake, so you got to be aware of what's going on.
So you said you invested in 27 properties. How many years has that been across?
Started in 2010, near the south end of 2010. Probably got into the first property right at the beginning of 11 or at the end of 10. Yeah, first property was in 11 and started studying this stuff at the end of 10.
So we're in your seventh year of investing in apartments as we record this in early 2018.
Yes.
Of those 27, how many, do you know how many have gone full cycle?
I do. It's 8.
You would think you're an engineer, huh?
Yeah. He's laughing because I have a little table sitting here that I keep up to date.
Charles has a spreadsheet in front of him and an Excel report that shows how much he put in and how much he received in returns. These engineers, it is unbelievable.
What's kind of the average return? You say like internal rate of return on your deals.
Yeah, I do think in internal rate of return, if you're a fellow who's ever heard of the rule of 72s, that's the number you need to divide. You can't take that other flaky number they sometimes talk about. In any case, the low was 5%, and I think of that as, well, it beat the bank. We had a reason we wanted to dump the property. It had 3 fires, so I'm not really upset about that one. And the best was 77.97%, as it turns out. So the average is sitting in the 30% range, high 20s, low 30s in that neighborhood. I never did do the math to get it to that point.
Of those deals, when you're investing, do you both value and yield plays, or were you just...
I have done both. I KP a lot, and we haven't talked about what that means unless you're more knowledgeable. But essentially, I try never to KP more than one value play. I am in 3 value plays, I believe, 4 value plays at this time. But the predominant numbers, because let's see, 9 minus 7, and I'm about 16, 18 deals at this point. So of those 4 are value, the rest are yield plays.
And then what makes you want to do yield or do both, right? What's kind of some of your motivations behind doing one or the other?
I can't let a good deal go by. I mean, sometimes you make a lot more money on a value play, and so you sort of roll the dice and see how it works. It is all about finding a good, for me, I'm a passive, it's finding a good lead or sponsor who's got a good deal, and when they approach me, I'm not necessarily going to walk away from either a value or a yield play because they're both good. One takes a little longer to start paying, the other usually has a bigger return on the end. It's all good money.
So of the deals you did, you said you averaged somewhere in the high 20s on an
Yes.
IRR basis. Is that still kind of what you expect today? I mean, we've obviously been in, I like to call it the golden age of apartment ownership. Last 5-6 years, certainly been a phenomenal market. What are you seeing today, and what are kind of your expectations today relative to 5-6 years ago?
Everybody's saying the prices are higher and things are tightening up and all that, but I got to say the best deals that have happened have been more recently than long ago. The returns, I mean, they've got to moderate at some point, so I certainly don't expect to hit that out of the world number 77 again, but by and large, I don't have any problem expecting somewhere in the high 20s or low 30s. That has been a fairly common number. I like it.
It's great. So a lot of people that invest with us, and a lot of people I know that use their IRA money, use self-directed IRA money. It's always been a pet peeve of mine. I think it is of yours. Have you ever invested with an IRA money, and what's kind of your thought process around there?
It was like the third or fourth deal. I had some IRA money, and I didn't have other money laying around ready, so I got into this deal with an IRA. And it's been my attitude. This is a learning experience, and so I did one. I probably would have done one anyway, but I did this one to find out sort of how it works, what are the problems with it, so I can speak honestly, because I actually help coach with Brad's people. They'll come to me because I've done so many deals. Anyway, yes, I've done one, and it annoys the heck out of me. I really hate the fact that all that capital gain that I will get when we ultimately sell that place will end up being income to me in the future. Essentially it has thrown away the capital gain tax advantage on that stuff. So I'll end up paying more taxes. And dang, if this isn't one of the good ones too. The thing pays great and it's going to way up in value. So it doesn't even make sense to transfer it out of an IRA because the value's so high now. But that's life. And, I do well on the other ones. So there we go.
How much role does your spouse play with investing?
I have to blame her for all of this, to be perfectly honest.
Oh, no.
She isn't throwing anything either. She was in real estate as a realtor, and she decided pretty much that she didn't like the cold calling and didn't like working on weekends and wanted to find some other way to do this. So she hauled me down to Lifestyles, and we looked around and we went, and we left. And then she hauled me back down there and we looked around and we got that nice presentation from our buddy Brad. And dang it, if I didn't like it, and we've stuck with it ever since. And now she's so involved, she lets me do all the work.
Charles, when you review an investing opportunity, what returns are you seeking on your investment?
I've been taught that what I want to look at is something in the neighborhood of 3 to 5 years, 100% growth on it, and I want to get near 10% cash on cash. I got to be honest, it doesn't always happen on the cash on cash, but the return has been wonderful when you finally sell the thing. So sometimes this is equity or investments that you're not going to see. They are definitely not fluid. So you can't put your last dollar into this thing. And I usually describe this as vacation money. When it comes, you get a ton of it and you can go on a nice vacation, but it's not eating money because you can't get it every time. There's going to be something go wrong with every apartment throughout its lifetime, and you're not going to get a check one quarter. And, it's just tough. That's the way it is. They got to make their bills. Sometimes your occupancy's up, sometimes it's down. So it's not guaranteed money, but boy, oh boy, it sure does come in nicely.
So how do you get comfortable with an investing opportunity?
I have to know the person. I mean, this is all about relationships on this stuff. That PPM thing, we're talking about having a close personal relationship. There's a cute word. Pre-existing, yes. You got to have a pre-existing substantive relationship. And so I tend to meet and get to know the sponsors of these things. When I get to know them, I'm looking for financial acumen because I want a guy who's done something in the business world so he at least knows how to run a balance sheet on the thing. I mean, he doesn't have to necessarily be a math whiz like, well, I think I am, but I may not be. Anyway, he doesn't have to be a math whiz. He does have to have some capabilities. He needs to be able to communicate. He needs to have certain qualities that I'm going to look for. And once I get to know him, then he's going to find a deal. And when he finds a deal, unless I just absolutely hate it or I've got no money, I'm likely to jump on it.
How important is a management company and the role they play?
Infinitely. Management companies have cost me a lot, or bad management companies have cost me a ton of money over time. By the way, anything I say that's negative, realize I'm still doing this. So the most negative is still positive. But in any case, the management companies can really jerk you around. We've had one where they just did nothing. I got to say my partners thought they stole the money, but I think they mismanaged it so badly there was no money to steal would be a more accurate statement. Typically, I like to have a separate management company than the person who's the lead. On occasion, you'll find a guy who's actually leading the deal and he's his own management company. And I don't like that. Did that once and it didn't turn out right. I have, in fact, done it again in a specialized sense because I have another input, but by and large, having two separate people wearing two separate hats is a good thing. And I don't want a deal that's so small you can't have on-site management. I've done that once. It was somewhat of a problem, and the management company that wasn't there didn't do anything either. So that was also the bigger part of the problem.
So what are some of the things that are just non-starters for you when you're looking at a deal? Obviously, you said you want to know and like and trust the sponsor.
Yes.
You want to make sure they have a good, competent management in place, and you got to understand the math of the deal, make it, the story of the deal makes sense, that there's some good market, good location, good economic drivers. But what are some of the things that come across your desk that you just throw the thing in the trash pile?
Actually, a lot of them come in, and you just can't get in every one of them you see anyway. So it's not that I throw it in because I dislike it, but there are things that I'm not going to really want. Some cities I will tend to avoid, and I guess that's really the location and the lack of either demographic information or bad demographic information there, one of the two. There's certain parts of town I would probably avoid. They say you can make money in every part of town, but somehow if you're looking at a real high crime district, that's not a great choice. I'm sure there's a few more of these things, but sometimes the deals just don't look good to me. There was a rundown property that it had a lot of hidden maintenance, it turned out, when they looked at it. I drove through the thing and it was questionable. There was also a property that had like 10 acres, I'm guessing, I don't know, but only 5 of it was developed. And I'm not a developer, I'm an investor in current apartments. So if you're going to utilize that land, you had to do something different. And I just wasn't on my radar to do that, so I didn't.
So when you get all these PPMs, do you tend to read them all? Kind of what's your level of diligence through these
I am a bit nerdy. And when I first started this thing, I crawled through it, and I would send mistakes back to the lead, by the way. It turns out lawyers aren't always as good as they say they are. But I did read them, just fine print, and I could recite them almost. But after about the 5th one, I started just skimming them, and now I pretty much skim them. And I've got caught by that. I mean, there was a surprise in one of the operating agreements that I didn't catch in one of the deals. It didn't matter to me money-wise, but it was a bit of a like, oh, that's what it said. But so it was different than some of the others had been. So, perhaps I need to read them more carefully, but I've been able to get comfortable by just looking at the clauses in there and go, yeah, and that's it.
Speaking of that, is there any sort of like clause within the agreements that you just absolutely got stuck with that you just don't like?
Yes, there are. All right, I'm on my soapbox at this point. It is, to me, bad, and realize that from my position as a passive, I get one choice. I can say yes or I can say no. I can't go in and redline the thing. Now, I guess if I were a KP on the deal, I might have some input. But by and large, the lead puts that thing together with his lawyer, and you don't get that much say. You get no say in it other than yes or no. But I would really love to see a trend that has the ability to push the lead out of the deal when he's not doing his job. I have been in one of those deals, and it was a horror experience, and we were only barely able to get him out. But it is, to me, something that the bankers allow him to do, because as investors, we're never going to be able to control that piece of it. But it seems to me the bankers would want to protect themselves against that, so that they would disallow the lead from having a share that is right at the number at which you can vote him out. To wit, if you take 75% to vote him out and he owns 24%, then you pretty much have to have unanimity to get him out of the deal. And in one case, he was losing everybody's money, and we would have lost the deal had we not. And we did, and it worked out fine. But it's I guess one of my pet peeves is they don't have that set up so that you can always get rid of it. I mean, there's a rule of thumb. You never want to get rid of a good lead, and you always need to get rid of a bad lead. So I don't see why they get excited about that. There's nobody going to throw them out if they're doing a good job. But I digress.
Do you personally meet all your sponsors?
Well, heck yes. In fact, I think by rule, I have to have a pre-existing substantive relationship with them.
Yeah, but that could have been a year ago. Do you go over it together, or does everyone do a webinar?
As of late, everybody's doing webinars. And I mean, that's okay for the deal. I dislike the fact that you can't be in a room, somebody raise their hand, they say something, and that causes you to think. And I think they cheat us a little bit doing that, sadly. But we're in a high-tech society. We tend to do things by webinars these days. But, I mean, I'm going to know the lead from outside that particular webinar. I'm going to know him from the Brad group, that I'm in. I'm not sure I'm allowed to say any more of the name of that. But
no, that's fine.
Anyway, but Brad Sumrock has this great group, and we know each other there, and I see them all probably 2 or 3 times a year at least, if not in some social settings more than that. So I do know the leads. They do the webinars.
Do you also require, a criminal background check on any of your
I have not to date.
sponsors?
I have not to date. It's an interesting question. If I had any real qualms about them, I might do that. Now we'd have to go out and look at 27 deals. There's probably 10 or 12 sponsors in there. We'd ought to do a background check on those 12 and see how bad I really am at picking people. My wife is much better at picking people, and so she does the people picking in some ways. She can tell people, I can do numbers.
So that's the role that she plays. So she can determine, can I trust this person or can I not?
If she don't like them, we ain't going there.
When should sponsors send financials to partners? What are you looking for? Monthly, quarterly?
I love to see that thing come in. A lot of people just delete them and let them go, but I don't necessarily have to go through all the numbers each and every time. But when I see something come in, that tells me that we've got something good, because no news is really bad news. Now, he might send me an update that says, well, we lost too many tenants, where our occupancy's low, but at least he told me. I learned from that one deal that did go poorly that you always want to keep your bank involved, and you should always keep your investors involved. Keep them up to date on what's going on. So yes, I like to see monthly, and I've got one sponsor at this point who is not doing that. I've been sort of asking, but anyway, monthly is a much better choice.
Do they send you a check every month?
I guess I do need to say that. I do have 2 that are sending me somewhat quarterly. One is doing it quarterly on schedule. The other one is doing it whenever. And the one who's doing it quarterly, he's sending checks. So he does get a little bit of a pass on that one. When I get checks, I like that. And that will let him slide till the end of the quarter.
Are good sponsors, what do you think, good teachers? So, if you want to eventually ever want to run your own deal, or you get enough good information that comes from the sponsor to kind of give you a comfort level how this thing is actually running?
If you ask them the question, yes. I mean, they're not going to call you in and have class. If you don't want to know, they're not going to tell you. Mm-hmm. But if you're an interested individual, and I am, I ask a lot of dumb questions. Maybe occasionally a good question, but I try to understand how it all works. And I'll take out the pencil and paper and work through the math on certain things that require that for me, so I can see if I understand it well enough. So yeah, the sponsors normally will be very helpful. Most all of them, I think. I've called a sponsor on a couple of occasions and asked them to tell me how things work. I do have the deal. I don't know if you wanted to hit this till later, but I had to take over a deal at one point. And in so doing, I called up one of my other deal sponsors and asked him a couple of questions on what I needed to do next and things like that. So yeah, they're always helpful, but you sometimes have to ask. They're not going to call you in and make you learn it.
And what makes a bad sponsor?
Not communicating. There's a couple of bad decisions you can make, one of which would be normally our financials are on a system where they're collecting the rents and putting all the information in. And if they change systems and don't run them in parallel, like every other business that doesn't work well, you can screw up all your financials, which causes you all sorts of tax consequences and pain level somewhere else. Let's see. So communications, not being forthright. Again, I think of the horror stories, and we had problems in that the software was bad. He wasn't communicating. When he was supposed to call the meetings, he'd tell you, we're going to have a meeting next week, and then you'd never hear anything about it. You send him an email. So communication is a huge piece of it. And being forthright with everybody makes mistakes. There's nothing wrong with making a mistake. I'd prefer they didn't, but people are human. But, tell us what's going on. Tell us how you plan to fix it or something like that.
We always hear about the great stories in multifamily, let's hear some of the more challenging stories. I like to get some of the more challenging stories out so people may learn. So let's talk about some of the most challenging stories, Charles.
Well, I have this story about an airplane where nothing can go wrong. You may remember that joke if you're old enough. In any case, the most recent fun event, and I do think of these things as fun. They're not what I eat on, so I can sit back and have a little bit more humor than perhaps someone who does this only. I have enough to eat at this point. But I had a partner. There were two of us that bought a 16-unit apartment down in Dallas. And sadly, he passed away earlier this year, January timeframe. And that was a huge surprise. Now, realize that there's two of us in it. He was the lead. I was the KP. And all of a sudden, I'm no longer the KP. I'm the lead. So my first rule after that was keep the bank involved. So I called them up, told them what was going on. And I was surprised, sort of, that the fellow on the other end said, hey, I've never had this happen either. We'll have to work through this. So we worked through it pretty well. The horror part of it is that they needed a guarantor. And because Jim and I were both guarantors on the deal, when he passed away, he was no longer guarantor because his estate couldn't do that. And so they had to look at me. Luckily, I had been doing this for a few years and I have gotten richer. So I was now able to guarantee the whole thing, or that would have been a real horror story. But I did guarantee the whole thing, ran it for 9 months, and then sold it because the heirs would like to get their money rather than having an apartment complex. And we made at least half a ton, if not a whole ton of money on the thing. So it was real nice. But it was a huge surprise to have to go through all the steps. And I mean, there's a bunch of steps. If your lead passes away and you've got no set up plan, and on a small deal that, it was a surprise. If you got two leads, clearly one of the leads is going to take the other one's place. Again, you still got the guarantor problems, perhaps. But if you only have one lead on the deal, you may have an issue if there's no clause in there that says what happens next. I have, as a KP, stepped up and done the leading a couple of times. So, it's not other occasions. This was the first time because of a death. Let's see. Then there was the deal where we did, in fact, have a lead who sort of went south. Now, this doesn't happen much. I've only heard of one guy before this. His was down in Arlington. This one was Irving. I should say that my lead also had a deal over in Fort Worth. The Fort Worth deal was value play. The deal in Irving was more of a yield play, but every yield play seems to have a value component. And so things are just cooking along real good. He decided to move on and do the second deal. And apparently he was not qualified to do a value play. Actually, we don't know what happened. Never have figured it out. But his focus was not on that. He could not maintain focus, and we were going spiraling down in a death spiral, to go with the airplanes again. And it was not good. So when we finally realized it, and what we realized was that he wasn't communicating. He was telling us he'd have meetings. He wouldn't have them. He was sort of forgetting to have the financial paperwork with him all the time. He was not passing out any information. We clearly weren't getting any checks. So we looked into it, and it was on December 23rd, the 2 days before Christmas. I got this notice from the bank. Being a KP, I got it. It said, hey, you're in default. Now, I got to say that's not money default. It was informational default because, and I later found out that the lead was ducking the bank and not sending them information and things like that. So on the 24th, I called up the bank and spoke to a nice fellow whose name I can't pronounce, but he didn't think much of me whatsoever because I was in on this deal, and I told him we'd fix it, and I don't think he believed me. But by and large, the next day was Christmas, but the day after that, I'm calling all the different members that I can get a hold of and searching to find the ones I didn't know how to do. By the way, if you are a passive, get a list of the other passive investors. You never know when it might help, and heck, they're nice people anyway. You might want them someday. In any case, we found everybody, because we needed everybody. Back to the other thing about the 75 versus 24% kind of deal. And once we found them all, we got them all to sign a letter to push out the lead, followed the operating agreements precisely. The lead had forgotten one of the clauses in there. It was hilarious. So when we pushed him out, he was not at all happy, and I'm no longer on his Christmas list. But he did leave. We took it back over. One of our members was actually a qualified lead by then. I was figuring I'd have to do it, but he took over, and that was great. So the second deal, the one that was over in Fort Worth, those guys were also having some struggling with him. And when I say he lost focus, he was like changing the carpet and then painting the walls and then, doing the carpentry in the rooms. He was just doing things all backwards and wasting a ton of money. In any case, we didn't get occupancy notices or certificates on the apartments when he'd finish them. And so we were sitting there with apartments we couldn't rent. And I think in a couple of cases, he rented them anyway. And so we were up for fees and penalties from the city. But, be that as it may, the KPs on that deal who had been struggling to get this thing to work, they called me up and said, "Hey, Charles, how did you do that again? Come on over here and help us out." So, and I was in on that deal. And so we walked through that. And so when he left the first deal, I said, if you will clean up the second deal, that will protect your reputation. But sadly, he didn't. They pushed him out, and I don't think he's in the business anymore. So, it's a sad deal. He was doing really well up until a point at which he just lost focus.
So the red flag really along the way was just lack of communication. That was the biggest thing.
Lack of communications, inconsistent communications when he did make them. We're going to have meetings. Oh, things are up. No, things are just fine. I mean, I called him a couple of days after Christmas, and he said, "Oh, I couldn't call them because they wouldn't have been there." And I'm just laughing to myself going, I don't think so. I called him and talked to him. But he would say things that just didn't make a lot of sense, that he was fixing it, that the software was being upgraded. We changed the software system, and that just royally messed us up for quite a period of time. But he could not get it through his head, or just wouldn't spend the time to re-enter everything, which would be a way to save it. But it's very time-consuming, and he wouldn't do that. I don't know. He was not a computer kind of guy, so this was probably above him anyway. But, to me, it made perfectly good sense, but he just couldn't fathom how that would help. There were just limits on what he would or wouldn't do. We also had a meeting where he forgot the financials one time, and that should have been a bigger flag, but I didn't figure it out right on that one. And then we didn't have another meeting. There were just phone calls that weren't getting responded to, and then that letter. Oh, and by the way, when I finally talked to the bank, I found out that we had gotten a previous notice that wasn't sent to me 6 months earlier. That was, in fact, the kiss of death, because clearly he hadn't worked on it the first time. He wasn't going to work on it 6 months later either. So
I think on the first one that you were involved in, that was a Fannie Mae loan, and that was what they had threatened you with, and what they did is it was a non-recourse loan.
It was indeed.
And there was a carve-out in non-recourse covenants in the paperwork that you sign, saying that you'll update them with financial statements, not only personal financial statements, but also operating statements on the property and rent rolls to kind of keep them. They're the 80% partner.
Yes, they are. They like the information.
They wanted to make sure that you were playing by the book, that you were providing them financial statements. And if you're not, they're not going to default on the deal, but what they will do is they'll pull your non-recourse covenant.
Yes.
And so that's what they did to Charles and to his crew, is that since the sponsor wasn't giving them the financials, they said, "Charles, you're a bad boy. We're going to take that non-recourse covenant and make it a recourse loan." And that sent a chill down Charles' spine when he saw that, because he had signed up on the deal to help the partnership, kind of be the fiduciary to the partnership and get things going. But he signed up as a KP with the non-recourse piece, and that was a little bit of a scary time. But eventually, fast forward on that deal, that you guys took the deal over. It had done very well. You guys owned it for the next couple of years, and then you eventually sold the deal, and you guys made money. And actually, the guy that put the deal together, he actually made money too.
Yes, he did. He should be sending me that Christmas card, but he's not. That was a thorn in a lot of people's sides that he made his money, but that is the way the contract is written. So
I think this is a good point. Maybe to drive this point home, because I'm an active deal sponsor. I have a lot of people that invest with us, and I constantly get asked, "Hey, can I KP your deal? Can I KP your deal?" So they want to sign the non-recourse carve-outs. And I understand why people want to do it, because they want to then get that at Fannie Mae Country Club membership and then go do their own deal one day. But I don't think people really fully understand the risk that come along with it. And you lived through it. So maybe, maybe expound upon that a little bit, because I don't think a lot of these new people that get in the business, they don't perceive that there's any risk in signing as a KP because it's a non-recourse loan.
When you're an investor, you're pretty much isolated. The most you can really lose, in a non-recourse at least, if it's a loan and you're not signing it, you can't lose any more than your original investment. But You don't want to do that either. But you should certainly know your lead. But when you KP and it turns recourse, they can come after your house, your car. I don't know I guess you can file bankruptcy and do something here in Texas to protect your car or your horse or whatever it is you want to keep. But by and large, they can come after you and they can take pretty much everything they got until they get enough money to cover that apartment. And I have a nice house. I mean, it's not a wonderful house, but I have a nice house, but it isn't the cost of an apartment complex. And so I'd be in a world of hurt. But yes, they can come after you. They can take a lot of stuff, and you got legal fees on top of that, and those guys make a ton of money. So there's all sorts of problems. So if you're going to KP, you should know that sponsor. You should be very comfortable with that sponsor. You got to know the risks. You should know his plan on how to fix it. I do have a rule that I never do more than one KP on a value at a time because there's more time consuming on those. So I'm going to know where he's at and what he's doing and what the plan is because I want to know. If I'm doing a yield play, it's a little less sensitive because those aren't going to be in the mud, so to speak. But you still should know the guy. You should know what your risks are. You should know what the backup plans are. And it's important to know that you could be on the block, so to speak, when it comes up.
Have you gotten compensated the times that you've KP'd?
I like to do with the compensation. I have a rule of thumb that I will take for a recourse 1% and for a non-recourse 0.5%. And of course, some of the deals you've done are huge, so that's an unreasonable number perhaps, but it's sort of saying that all the KPs together should get a certain amount. Yes, I like being compensated because there's a lot of work involved, and if you don't think so, you got to put your financials together every year or every 6 months, depending on the deal. You do have to take some time off. Remember, I do work to go sign that loan. If you get refinanced or something like that, you might be involved in that piece of the two. If the refinancing or the supplementaling happens, then you're likely to have to do your finances again, and that can be a big pain. So
there's risk, right?
Oh yeah, there's risk. I mean, it's not a risk-free.
Yeah.
So there's two rules. I mean, there's some people that think, oh, he can be a KP just because it'll get him in the door, and I'm thinking, I'm in that door, dude. If you need a large net worth, and I'm okay. I'm not huge, but I'm a pretty good net worth when I come to it. If that's going to help you get this deal, you can put me on your, you can put my resume in, you can put my net worth into the deal that makes it look good. Dang it, that's worth something to you, so it ought to be worth something to me. And so, yes, I like being compensated. And that's not necessarily true the first time I did it, but it certainly was after that.
Yeah, so I think that's a good point that, we talk about KPs all the time, but we never really drive home the risk of the deal and the value that really brings to the sponsor in the deal. And generally speaking, there should be some sort of compensation for that additional risk and the financial benefit to the sponsor.
If we go back to my Franconia, the one I talked about where it was only Jim and I, we didn't pay each other our KP and fees or anything like that. It was actually a no overhead deal, so it worked out nicely. But by and large, if there's people that are of a lesser class, i.e. just investors, and then there's an override, dang it, jump in and get a little piece of that override. Not a lot. The sponsors do a lot more work. They're good for what they do. I'm getting a really good income, but by and large, I am taking a bigger risk than the other people, so I ought to be compensated for it.
What do you anticipate in the future? Are you thinking that rates of return are going to be pretty much the same? Do you think the market is still a good place for people to invest in?
I think so. I have a good friend who has these wonderful meetings that has this lady come down and talks about all of the financial expectations and all that, and she thinks it's going to be good. I personally think that in the next 5 years, we're likely to have one downturn year or something like that, but people are still moving to Dallas-Fort Worth in droves. I do have properties outside Dallas-Fort Worth. I am fairly happy in most ways, not all ways, with the present government's plan on cutting regulations and making things a little bit easier to go, and business is going to start looking a little bit better. So, yeah, I have a really positive look on this thing for the future. And if we have a downturn, I mean, it would be bad if that happens to be the point at which you jump in. But, I'm way ahead of the game at this point. So if we have one down, it'll just give me time to buy another place.
Any advice for potential limited partners and or sponsors from your seat in the airplane?
Oh, yeah. First, you like that leg room. Oh, wait a minute. That's the airplane again. Learn what you're doing. understand what you're doing. And, there are several places out there you can get the education. Lifestyles comes up. If you turn on your radio, I'm sure you've heard them. Brad Sumrock has a great deal. There's a couple of people that are trying to nibble on his heels. But to my knowledge, Brad is the best for multifamily. And if you're going to do single family, I guess I would suggest Lifestyles. But be that as it may, there's another group that meets at DFW. I can't think of their name. In any case, learn what's going on. Most of the people have webinars that teach you the mathematics, teach you how to use the calculations for the thing, teach you how to do the marketing of the place. That's the market survey or research that goes around buying it. They teach you a lot of stuff, especially on the acquisition. So get to know what's going on. You have to know the marketplace. Attend conferences, at least one or two of them, just so you can see the vast number of possibilities out there. I was amazed. There are all manner of people trying to get their hands in your pocket to get your money. But there's 1031 specialists. There's specialists in whole folks type homes, and I'm sure there's a better name for it, but I can't think of it.
Assisted living.
That's it. Assisted living. Yes, thank you. But there's different styles of assisted living. There's different levels. And then there's also people that'll do storage facilities. There's people that do hotels. There's people that do banknotes. There's people. It's unbelievable how many folks are out there and how many different facets of, quote, real estate. Even if it's banknotes on real estate, it's still associated with real estate. And then there's every lawyer and their cousin in these things, and they're all trying to get you to do something with them. It's fascinating. So learn how it all works. Try to figure out. And personally, I picked one area, multifamily, and I stick with it. I have a friend who does several different facets of this thing, but he's smarter than I am. So I stick to one and go down it. Let's see. So that's investor part of it, but learn it and then jump in. You can go to one of these groups and you can pay your money and you can sit there and do nothing. It isn't going to work. I've got one friend, he's actually out of Austin, and he was supposed to come to the last training session, and he was too busy. And I said, look, if you're too busy and you're going to continue to be too busy, this won't work. You've got to be involved. So think about your life. If you can be involved, and if you're not so shy that you can't shake somebody's hand, you can do this. It's not hard, but you do have to get out there and you have to meet leads. As a passive, I have to meet leads. I get to meet Mike Becker and put money in with him perhaps, or put money in with these other folks, but I have to do it.
Now, Charles has not invested with you, right?
No, I have not. No, I have not.
So,
my charming personality, I guess.
So, for full disclosure, Charles and Gayla do not invest in Michael's deal, but
he had a really nice one over in Fort Worth too.
Gayla must not like me, I guess. Huh?
You didn't make the cut this time. So, Michael, really, we'll wrap this up. How important are limited partners in the success of any deal?
Any sponsor, from a sponsor's perspective, you don't have 10, 12 million bucks just laying around, most likely. So you need the passengers on the airplane, to go back to the plane analogy. You need the limited partners, and everything Charles says, I would certainly echo, and it resonated with me being on the other side of the transaction, being the lead in these deals. And then being a former banker, observing it, and unfortunately being in the middle of the Fort Worth deal that he just mentioned as well. We didn't talk about that. Back in my Wells Fargo days, I was right in the middle of that transaction.
His name did come up a few times.
Maybe that's why they haven't invested with me.
That's right.
But what he's saying is about communication. Both good and bad news need to travel on a regular basis, and something happens, you communicate. And I think my perception of it, people generally understand that these, every deal I do, every pro forma you put together, I'm going to be wrong on. I'm either going to do better or I'm going to do worse, but you never hit exactly what you say. Things happen along the way. These are multi-unit places with independent people that are unrelated, living in close proximity to each other. You own an apartment, a couple things are going to happen. People are going to die. There's going to be fires, and you're going to get sued by a tenant. And that just happens. And, you need to make sure you have proper management in place and contingencies, and you do your due diligence on the front end. And you set these things up right with a proper debt in place and the capital set aside up front to deal with these issues. And you communicate along the way. And if you do that, I think you get a good reputation, and then you get loyal investor base, and then they tend to kind of like gremlins, put water on them, and they multiply. And that, like Charles said, he needs to go to places where he can meet qualified sponsors and get in front of them. And as a sponsor, you need to go to places where you can find qualified passive investors. And there's a lot of tire kickers out there as well. But then, amongst those, there's a lot of good quality limited partners, and you just need to treat them right and And, like you said, integrity and being forthright and communicating, those are all the things that you need to do along the way. And I've been on the same boat as him. We've had some deals that stuff happened along the way, and maybe the yield hasn't been exactly what we had hoped. But at the end of the day, we've, every deal's been a home run. I'm pretty sure I can, any deal we do, one of the more recent things I said, I'm pretty sure I can double your money on any deal we do. I don't know if it's going to take me 2 years or 20 years, but, it's probably going to happen because real estate's pretty forgiving. So just how long is it going to take to double your money?
That's pretty good. And I got a chuckle out of, they weren't saying Michael's name in vain. But maybe they were doing it because Michael was the lender that made the loan to Charles.
Just one of them.
Charles and his,
I played Paul on that deal, though.
Yeah, thank you. I had to twist his arm to do that deal anyway. So some great information, Charles. I mean, you have really helped a lot of people kind of understand the perspective of the limited partner and their role and what you're looking for and when they should get financial statements out there and some of the challenges that you came across. So some great information. We do appreciate you being in the podcast today. Michael, anything else going on?
No, we just definitely appreciate everyone listening. I know our listener base is continuing to grow. So I know we're over 40,000 downloads a month, which is great. So we definitely appreciate that. And if you guys find value in the podcast, if you can, give us a 5-star rating review on iTunes or Stitcher or wherever you listen to this podcast, as well as potentially referring a friend if you know anyone that is an aspiring either syndicator or passive investor or just a straight up apartment nerd. We certainly would appreciate you guys spreading the word about the Old Capital Real Estate Investing Podcast.
That's great. Charles, any last word?
One more thing for the investor is pay attention to who the property manager is. They will either make or break the deal in so many ways. And so there are a few these days I will sway away from a deal on that purpose and a few that I will go to a deal on that purpose.
That's great. Great information from Charles Lemire. We appreciate that. Michael Becker, thanks for sitting in. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.